Okay, what if I told you the US government actually created a special account, one specifically designed to help you build millions of dollars completely tax-free? Seriously, it's called a Roth IRA, and today we're going to break down exactly how you can use this thing to lock in your financial future. Now, I know what you're thinking. That sounds like a cheesy sales pitch, right? But this isn't a pitch, it's just math. Think about your daily routine for a second. That $10 you might spend on a coffee and a snack, it feels like nothing, doesn't it? But what if that tiny, daily habit could be the key to a super secure, wealthy retirement? Let's look at how. All right, here's where it gets really exciting. That $10 a day, that's about $300 a month. Now, if you invest that money from age 25 all the way to 65, and you earn the stock market's historical average of around 10% a year, you could be looking at nearly $2 million. But here's the best part, the absolute game changer. Thanks to the Roth IRA, every single penny of that is yours. Tax-free. The IRS doesn't get a dime. So what exactly is this magic account? You know, retirement planning can feel super stressful, but this tool can turn it into a simple, straightforward strategy. Let's really dig in and see what it's all about. This right here is probably the most important thing you need to understand. A Roth IRA is not an investment. The best way to think about it is like a special bucket or a container. The government gives you this bucket, and this bucket has incredible tax benefits. But when you get it, it's empty. It's your job to fill that bucket with investments, things like stocks and funds, that will actually grow your money over time. So you've probably heard of a traditional IRA too. What's the difference? It's actually pretty simple. With a traditional IRA, you get a tax break now, but you have to pay taxes when you take the money out in retirement. With a Roth, it's the exact opposite. You pay the taxes up front on the money you put in. And what's your reward for that? Well, all your growth for decades and all your withdrawals in retirement are 100% tax-free. It's basically a choice. Pay a little bit of tax now to avoid a massive tax bill later on. So, are you ready to get started? The best part about this whole thing is that it's not some complicated financial trickery. You can literally set up your own Roth IRA in about 10 minutes. It all just boils down to 3 really simple steps. First, you just open the account. You can do this with any major brokerage firm. Think Fidelity, Vanguard, or Charles Schwab. Step 2, you fund it. You just transfer money from your bank account right into the IRA. And third, and this is the most important step of all, so don't forget it, you have to use that money to actually invest. And that third step, investing the money, brings us to the single biggest, most common mistake that beginners make. And I'm not exaggerating here, this is a potential $1 million error, so you're going to want to pay very, very close attention to this next part. This is the question I hear all the time from people a year after they got all excited and opened their account. They log in, they check their balance, and it's exactly what they put in. It hasn't grown at all, and they think the whole thing is a scam. So what's going on here? And this slide tells you exactly why. Remember that bucket analogy we talked about? If you just put money in the bucket, it's just a pile of cash. It's not going to do anything. You have to take that final step and use the cash inside your account to buy investments. And a really simple way to start is with something like a broad market index fund, which instantly puts your money to work across hundreds of America's biggest companies. Okay, so like any powerful tool, there are a few rules that come with it. But don't worry, they're not complicated. Let's just quickly break down the fine print you absolutely need to know. So the first big rule is the contribution limit. For 2026, that limit is $7,500 if you're under the age of 50. Now, this number usually goes up over time to keep up with inflation, but you can't put more than the annual limit into your IRA. It's kind of the government's way of putting a cap on this incredible tax deal. So, we've got the contribution limit. There are also income limits, which means if you earn too much, the government might limit your ability to contribute directly. But here's a really key rule you'll love. You can withdraw your original contributions, that's the money you put in, at any time for any reason with no tax and no penalty. It's only the earnings, the profit, that has stricter rules. For those earnings to be tax-free, your account needs to have been open for 5 years, and you generally have to be at least 59 and a half. All right, now that we've got the basics down, let's unlock some of the Roth IRA's hidden superpowers. These are a few pro tips that really take it to the next level.
Now, this is a fantastic question. We already know your contributions, your original money, are super accessible. But what about the earnings? The profit your investments have made. What if a big life event pops up, like buying your first house? Is that growth just locked away until you're old?
And the answer is
Yes, you can get to it. The IRS allows a special exception just for first-time homebuyers. As long as your account has been open for at least 5 years, you can withdraw up to $10,000 of your earnings completely penalty-free to help you buy your first home. This is an incredible benefit that so many people just don't know about.
Let's run through a few more quick tips. If your job offers a 401k match, you should always contribute enough to get that full match before you put $1 in an IRA. It's literally free money, a 100% return on your investment. If you're a high-income earner, you should look into something called the Backdoor Roth IRA. And finally, a cool little tip. You actually have until the tax filing deadline, usually April 15th of the next year, to make your contributions for the current year.
We've covered a lot of ground here, but honestly, it all comes down to one simple thing: the immense power of just getting started. Your very first step is always the most important one. And this chart, this shows you exactly why starting early matters so much. The power of compound interest is like a snowball rolling downhill. Someone who starts at 25 has this huge, massive head start over someone who waits until 35 or 45. But listen, the point here is not to make you feel bad about the past. The key takeaway is that the best time to start was yesterday, but the second best time is right now. Wherever you are on this chart, starting today is the most powerful move you can make.
So that's really the choice we all face, isn't it? You can stick with the small daily habits that cost you money, or you can build a new daily habit that builds you a tax-free future. What are you going to choose to do today?